right. You have two professors up here. First off, we would like to thank the GBA. If you guys are not members, this is a call out to the world. You should definitely come and become a member for the Government Blockchain Association and get actively involved and help build this community. At the end of the day, Gerard has done a wonderful job, and David Hook is running sort of the DC component. David Hook is an amazing individual. He is the Chief of Staff of the Department of Veterans Affairs, National Artificial Intelligence Institute. They have a wonderful competition. I encourage everyone to sort of participate, and you could sort of talk to David afterwards about, what are the requirements for the competition, but it's a great way for small businesses, especially emerging technologies, to get integrated into government agencies and organizations, especially the VA. So a big shout out for David Hook, and thanks for getting involved. We really appreciate that. So my name is Jim Liew. I'm an associate professor at Johns Hopkins Business School. And actually, I proposed this Cryptos and Blockchains course about 4.5 years ago. And when I proposed it, I got yelled at. So we've come a long ways from there. It's one of the most popular classes. It's always full of MBA students, and there's a lot of demand, and the next generation really wants to get involved. I also co-founded SoCat. SoCat is a crypto asset management company, and also we develop software solutions for AI, machine learning, and blockchains. So that's me, and I'll pass it over to Bill.
Thank you, Doctor. Because everything is shut down, we didn't get a chance to rehearse this. So I just want to warn you guys, okay? So I'm Bill Cunningham. I'm an economist. I run creative investment research. I'm also an adjunct at Georgetown. And that's really about it. Now, what I'm going to do, I'm going to step off while you go through your, the way we set this up was, he was going to start and kind of go through a lot of very good information on money. Functions of money, purposes of money, history of money, all of that sort of stuff. And then I'm going to step in and try to talk against all of that. Okay, so I think that's what we determined.
This is the University of Chicago way, right? So we want to stir some thoughts, and whether you agree with us or you don't disagree with, that's perfectly fine. We're all learning together as sort of we're reaching out to understand how blockchain is going to change the world. And in particular, we want the US and DC to lead that charge.
Yep. One last thing, Mr. Kennedy, my new intern from American University, showed up to this is like the first live intern event I've had in 2 years. So thank you, Mr. Kennedy, for showing up. Now I'm going to turn it over to you.
Thank you, Bill. What a great internship. Hang out with the professor and go to a live, amazing blockchains conference. So let's get started here. This is the functions and properties of money. And I'm just going to set the stage here, and I'm going to put in a couple of sort of thoughts as we're going through these slides. And Bill's going to come over here, and he's going to wreck everything, because we want people to start sort of thinking about these things. All right, so next slide, please.
You have the quick
Oh, I got to do it. Sorry about that, guys. Oh, here we go. Okay, so this is what we're going to cover today. A brief history of money, definition of money, Jevon's 4 functions, and we'll learn a little, fun little poem. Properties of money and digital money. And then we're going to hand it over to Bill to wreck everything. So our little history lesson is actually very important, because what's happening here is over time. Let's look at the big picture, okay? Let's not just get caught up in the recent past century, right? Let's look all the way back in history. So what is money? It's something of value. 10,000 BC was the beginning of bartering. People were bartering, right? With what? Well, cattle and animals, that was considered money. Could you imagine paying some senators and congresspeople, you bring over some cattle or some deers and give it to them as their compensation for their salary? That would be pretty interesting, right? But then we moved on, we became more sophisticated. We started using seashells as money. Now, I could just only imagine the counterfeit that existed there at the time, where you just go to the seas and get more seashells and say, hey, I'm rich, right? Next up, we started to use metal. This is 1000 BC. Metal money and coins, bronze and copper. Not surprisingly, this innovation came out of China, and we'll see that China actually leads in the development of new sort of materials for money. In 500 BC, we started to use silver, and we would stamp on it gods and emperors. I mean, if you have any change in your pocket, you pull it out, you can sort of take a look at what we do now with, in terms of stamping faces onto our money. In 118 BC, China introduced leather money, okay? And then now we go to sort of AD. Paper currency was introduced in China in 806. In 1860, we went on to the gold standard. So now money was backed by gold. And this is actually pretty interesting because when you start asking people about what is money, what about gold, they kind of sort of know that history. But they don't really know the history of livestock and the history of seashells and so forth and leather, right? So, what we're seeing now, beginning to the sort of modern day, we were on the gold standard. We sort of came off the gold standard. Bretton Woods put it sort of us back on the gold standard with the US dollar being backed by gold, and everyone's sort of linked to the US dollar. And then we terminated the US dollar and gold link in the United States, and now we started introducing fiat. And so what is fiat? Fiat says that your dollar is backed by the government. Okay, so if you trust the government, which I do, because I know there's a lot of good people there trying to do good things, then you trust the money. However, this is the big however. Is the amount of US dollars fixed? Kind of like Bitcoin. Remember, Bitcoin's only fixed 21 million. Can we ask the Federal Reserve, hey, fix the supply and we'll kill inflation? Because what is inflation? Basically, the dollar loses its purchasing power. So you can't use the same dollar to buy the same amount of baskets of goods. This is well known, and we teach MBA students all the time about inflation, but we haven't really seen inflation in some time. So it's kind of a new sort of concept, especially for the younger generation. So now we're in 2009. Not surprisingly, after the financial crisis, 2008, people started to lose some confidence in our system, right? And we have the introduction of Bitcoins, 2009. And here we are now, right, in 2022. And Bitcoin has become more and more mainstream. Everybody's talking about it. Just turn on CNBC, right? And we're starting to understand what this thing is doing, which is very interesting. But who is the central player in Bitcoins? Who's in charge?
Everybody.
Is there a government? Is there a Congress? Is there a Treasury? Is there a printing press? Who's in charge?
The community.
The community, the network, right? And so now what we have done is basically the power of concentrated sort of controlling of money has been dispersed to the network. And now each of the individual miners and the people who are participating in the network, they're in charge. And now I would argue that this is a natural evolution of efficient markets, okay? Let's view this as the market's behaving efficiently. And now the power is going to the edge of the networks. And Bitcoin and Charles Hoskinson last year came up here and said, was talking about freedom. And that is so un-American. America is all about freedom at the edge of the network, which is you guys, US citizens, right? So this is empowering, and this is very much in line in everything that sort of America stands for. And that's why I personally think, America should lead this blockchain's revolution, because it's in line with sort of what we do. Okay, now let's move on. So what is money? Money, according to Wikipedia, is any item, cattle, coins, shells, right? It could be electronic money, or verifiable record, a digital ledger in the cloud that everybody can see, that is generally accepted as payments for goods and services. So what does that mean, generally accepted? If the majority of people start to believe Dogecoin as acceptable, right? It may not be our generation, it may be the generation below us. Or maybe it's a generation that hasn't been born yet. If they start to accept that as payment, then what happens to Dogecoin? To the moon, it becomes money, right? And so those are the things that we have to sort of think about, right? What is sort of acceptable as payments for goods and services? Or repayment of debt. And we'll see this concept. Debt is just basically borrowing money today, doing something, or lending money in the future. The money goes through time. So money can go through space, where we can interact with money now across many different individuals, or we can sort of borrow from the future. And that's a lot of what we're doing, right? We're borrowing from our kids' future and our kids' kids' future, right, to spend things now. But that's just basically the present value of money. Also, taxes. So you could use payments for goods and services and repayments of debts, such as taxes. We all live in the United States of America. We all pay Uncle Sam our taxes. In a particular country, we're in the United States of America. Now, this is where it gets really, really interesting, and I want to really challenge you guys to think about this and understand the multiple dimensions of you as an individual in a particular country, you're all in the United States, or social economic context. So what does that mean? That means I'm part of a government blockchain association. So if they launch a token, I'll hold that token in my wallet, and maybe I'll give it to Gerard or his wife, Kathy, right? Maybe they use that as sort of the membership fee. So now there's another social economic context. I'm part of GBA. What happens if Johns Hopkins launches their own token or coin? I'm a professor there. I'll probably buy some of that. So then there's another layer of my life that I'll be transacting with, quote, money in the Johns Hopkins system. Maybe I use the money to sort of book time with another professor so I can, bounce some ideas off. So now I have the US dollar in my pocket. I have a little cryptos, maybe Ether, ETH, and Bitcoins. I have the GBA coin, and I have a Johns Hopkins coin. But imagine that for your guys, for yourself, right? How many different dimensions are you going to be associated with? And which ones would you believe in, right? So I think money is fascinating. I really like this definition because it's all-encompassing. And this is what we have to sort of think about, right? We can't get so pigeonholed just to think about money as the US dollar backed by, fiat, right? Okay. Now, in 1875, there's an economist. He was an English economist and logician. He kind of got money right. This is a long time ago, okay? And everything that you hear about money follows sort of Jevon's 4 functions of money. Number 1, a median of exchange. So you've heard that many times. Money is a median of exchange. The other one is a common measure of value. So a unit of account, right? Because we have to count money. We use pennies, right? Bitcoin uses Satoshis and so forth. Also, it's a standard of value. And this standard of value is deferred payment. So it has to do with sort of, the present value of money. So think about money moving through time, right? If I gave you $1 today, how much would it be worth in 1 year time? So it's going to be discounted. So we teach business school students about present value formulas, present value now, how to push it to the future value. If you're going to receive $100 in the future, how do you discount it to the present? That's just measuring the time dimension. And what's really interesting about that dimension is most of the times we use the risk-free rate of return, right? So you're going to pretty much certainly receive that $100. How much is it worth to you today? So it depends on the interest rate, right? Now, this is something I want to challenge everyone to think about. And one of the reasons why I got started out in finance was because of this simple story. And it had to do with arbitrage. And when the professor at the University of Chicago was going through and teaching me about arbitrage in the whole class as undergraduates, I was like, wow, this is really interesting. So the story goes as follows. You're walking down Main Street, and there's 2 banks. One bank has an interest rate of 5%. You can borrow and lend at 5%. And another bank has an interest rate of 10%. 5% and 10%. So what can you do? This thing called arbitrage. You will go over to the first bank and you will borrow money at 5%. Then you go over to the second bank and you would lend it at 10%. And that 5% differential is your arbitrage profit. And how much would you do that? As much as possible until the market forces drove the 5% and the 10% to equal, right? Everybody sort of learns this in business school. I thought that was a fascinating story. I always thought to myself, would I ever see this kind of arbitrage, maybe on Wall Street, maybe on Main Street? Maybe whenever there's a crypto world and the real world, right? And so that's what's really fascinating about these things, is that there is some arbitrage abilities between the real world and crypto world, and we're still developing. But the key point is that the safety and the belief of a bank that's on Main Street right now in the real world, if we can get that level of safety in the crypto world, then there's going to be this amazing arbitrage opportunity. And all that has to do with this sort of deferred payment standard of value, which has to do with different interest rates in different worlds. So if we were in class, I'd make all the students memorize this for the next class. But basically, there's a little statement here. Money's a matter of functions for a medium, a measure, a standard, a store. Now, obviously we're not in class, so you don't have to memorize this for next year, but I thought it would be just kind of fun for you guys. All right. All right, there's a wonderful money flower, and I'm not going to go into this, but the central bank cryptocurrencies, these guys did a wonderful job of laying out a universally acceptable electronic central bank and peer-to-peer. This is a great flower, so hats off to these authors here. But here's a little brief history. Bitcoins wasn't the first. People have tried to create some kind of e-cash, right? DigiCash, David Chaum, he tried to do it. It didn't work. That was 1983. E-gold was tried. It was the first, quote, internet money. Government shut it down. Okay? So then PayPal actually introduced the US denominated service dollars in 1998, and it was okay. So what is important to understand is that people are trying to develop this technology. Entrepreneurs are trying different things. And so the government is very important in terms of sort of allowing things to go through or not. They can absolutely shut things down. My point of view is we have to understand that there's a lot of entrepreneurs and technologists tinkering around trying to find a better way. And when they find a better way, and if it's acceptable, then we should encourage that. Because at the end of the day, there's going to be a lot of jobs created. I would love to go down to Congress and tell those guys to recruit all the top crypto engineers. And there's some crypto entrepreneurs who are overseas. We should bring them all back, especially in Baltimore. We could get some, CZ and Binance, and there's another guy who did Polkadot. If you could bring those people back to the United States, that would be amazing. Ethereum launched in 2015. It was basically Vitalik saw that Bitcoin wasn't enough, and they wanted to add smart contract platforms. And on top of Ethereum, other sort of founders said, hey, Ethereum's not enough. We need to solve this trilemma, decentralization, security, and speed. And they branched off, okay? Now we're sort of at the down. We won't talk too much of that, but it's very interesting how this is developing. All right. Now I'll send it over to Bill, who's going to crush all these ideas.
Dr. Liew, excellent job. Excellent job. I really appreciate you. Well, I've got about 4 minutes, so I'm going to go through this pretty quickly. The bottom line is that one of the functions, am I pointing this the right way? Point it over there. Okay, very good. Let's see if that works.
Other way around.
Other way around, okay. Boy. There you go. All right. So here's the deal. There's a fifth function of money that cryptocurrency brings to the fore. It is social control. Social control. That's the fifth function of money. The other thing is, this is why the central banks are so worried about cryptocurrency. Here's a modern example, or I guess kind of a current example that expresses why they're so concerned. So as you know, Biden has threatened to kick Russia off of SWIFT, right? If you're Vladimir Putin, what do? What currency do you use if you get kicked off of SWIFT? Use Bitcoin. Use something. It doesn't matter. Kick me off of SWIFT. I don't care. I'll just, I will adopt my entire economy to a Bitcoin standard. So that's the issue with respect to social control. Now, what do we mean by social control? Dr. Liew put up this chart. Social control encompasses the entire flower. And there are two things I want to point out. Number one, money is not universally accessible. There are certain groups, certain people who do not have access to money. We know that because there's a certain percentage of the US population that does not have banking accounts or checking accounts or money accounts. Why is that? And the other thing is, in terms of being central bank issued, fiat currency being central bank issued, that's also a myth. It's basically issued by commercial banks. The way you know that is that there are no poor people who are on the Federal Reserve Board. There are no welfare mothers. None of that group is on the Federal Reserve Board. It's all bankers, which is fine. I mean, I get it. I get it. You want people who have technical expertise in finance to be on the board of the Federal Reserve. A bunch of economists. I get it. But that definitely relates to the issue of who controls money and how they control money. So, in terms of social control, the first level is that only a central bank has the right to issue fiat currency. The monetary social control theory that I've come up with kind of explains the manner by which money and currency determines the allocation of primary resources needed for life cycle survival in a functioning modern society. What are those things? Food, water, first aid, medical care, thermal resources and shelter, sanitation, hygiene, lighting, communication. You can't get any of those things in a modern functioning economy without money. You can kind of barter for them, sure, but at some point, some money is going to change hands in order for you to be able to live. And then finally, the racial monetary control theory explains why certain groups are, the current system supports the historical distribution of economic resources by ethnic or racial group. Once again, the way you know that is look at the black-white wealth distributions. Here's the thing about that, black-white wealth distributions. For that black-white wealth distribution to be valid and justified, it would have to mean that black people are inferior, economically, socially, whatever. Actually inferior. But we know through a number of examples that that's simply not the case. So then you have to ask yourself the question, why is money distributed in that way? It's because the systems that have been put into place exist to keep money out of the hands of certain people, certain groups of people. That's kind of what this was a thing, Dave Chappelle on social control and money. I'm going to skip through that. No? Okay, all right. You guys want to hit that? Let's see if we can. Economist David Chappelle, he really goes through this.
As soon as I check in the hotels, welcome to Disney World, Mr. Chappelle. Can we interest you in some Disney dollars? Nah, man, I'm cool. I like them greenbacks. I like them greenbacks. You know what I'm saying? It's the kind of money people spend. People is very particular about that. I saw that. That was one of the main stories from the war. Was the first big thing we did was they said, now that Iraq has been liberated, we have managed to take Saddam Hussein's face off of the money. And I'm not gonna lie, when that press conference came off, I was like choked up. I was actually proud to be an American because that is a very subtle psychological nuance of oppression to have a dictator on your money. And it's thoughtful. But then I thought, well, if you could do that for Iraq, what about our money, man? Our money looked like baseball cards with slave owners on.
But basically what he does is he goes over all of these social control issues in a very funny, very interesting way. And he's talking about the role that it plays in society and from a very specific perspective with respect to his vacation at Disney World. Basically, because Disney has their own money. And it's an interesting take on the social, I think, an interesting take on the social control aspects of money. And then he also talks later in the video about U.S. currency. He says that, you know, we took Saddam Hussein off of the currency in Iraq, and then he said, well, I thought about our currency. Our currency looks like slaveholders. It looks like baseball cards for slaveholders, you know? So it really does start to speak to issues of social control. So this is the key. There is a fifth function of money, which none of the Western economists have dared to discuss and talk about until now, because cryptocurrency, Bitcoin, forces that functionality into the open. You can't ignore the social control aspects of money. And until we do that, we're always going to be behind the curve, because surfacing that social control functionality explains the reluctance of central banks, of regulators. It also explains the attraction of the technology to people like El Salvador and to Russia, kind of why they are glomming on to this technology. It's because it gets them out from under a social control mechanism which has not necessarily helped them to maximize social return for their societies. So it is with any underserved, discriminated against group in the world. That's why you can't stop this. You can try, you know? And again, it's not like Bitcoin will be the end all and be all. I think you're going to get Bitcoin 2.0. I think you're going to get Bitcoin 3. I don't know what it looks like. All I know is that once this type of technology is surfaced and has proven its utility in helping people to self-actualize, then you can't really get rid of it. You really should try to get along. Final thing I'll say is this. If you think about why Satoshi created Bitcoin, and by extension blockchain, it was because of the failure of regulators to protect the public interest in the years leading up to the 2008 financial crisis. What happened was investment banks utilized the dollar standing as global reserve currency to distribute and sell fraudulent financial products around the world. Regulators should have stepped in. They should have said, hey, you can't use the US dollar status as global reserve currency to sell subprime loans and securities in the UK and in China and in all other places, because that's what you're doing. You're using the fact that the dollar is distributed all over the world to sell these securities in, knowing that those securities did not represent the kind of value that you claimed that they represented. In a normal world, in a fully functional financial regulatory regime, the regulators in the US, because it's our dollar, regulators in the US would have stepped in and stopped that. Say, hey, you can't use the dollar's status as global reserve currency for profit maximizing motives for individual financial institutions. My hope, and one of the reasons why I'm so engaged with GBA, and thank you, by the way, Gerard, for inviting me and letting me talk, because Gerard said, whoa, you know, man, if you think that, hey, we got a conference coming up, maybe you can say that. One of the reasons why I'm so engaged here is because I do think that this new technology represents an opportunity to help maximize social return using these new digital tools. So I think that's about it. Look for we'll post the Dave Chappelle thing online so that you can take a look at it. But please take a look at that. I want to thank you. I want to thank Jim. I want to thank my intern, Mr. Kennedy. I want to thank Gerard for allowing me to get up here. Are we doing Q&A? Are we doing questions? Okay, no, we're not doing questions because we're running into time. We'll do it at the end of the day. So please write down your questions, and I'll be around also. So if you have any comments, questions, concerns, please let me know. With that, I'm going to invite our moderator back to the stage and say thank you very much.